Okay, so what kind of situation do we currently have on gold? Let's make a full breakdown. So starting from the monthly time frame, we have a market that clearly has created a very strong impulse to the upside, creating all-time highs, so breaking above the high that the market had created in 2011. And we definitely expected after the market created all-time highs to see the market actually give us a retracement from all this bullishness, which is exactly what the market is currently doing on the daily time frame. Going down on the weekly time frame, what do we have? Now, on the weekly, we can as well see that the market has created a very strong overextension in the market, and we definitely expect a retracement from all this bullishness. Specifically, if you want information on a retracement in the market, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the low to the high of the impulse. And what you can see is that we have a 0.382 first target to the downside for the retracement at this level, which is our downside target at the moment. Going down on the daily, what we can see. Now on the daily, we can see a completely different scenario. Let me explain better. Before the market can reach this level to the downside, there is one important structure level that the market will face. In fact, in all this move to the upside, there is one candle which is not related to the move, which is exactly this red candle here. So this candle that is not related to the move shows that this area here is a strong structure area for this market. And from here, we can actually expect a rejection to the upside from the market. So when the market will reach this area, we definitely expect a rejection. However, we have a downside target from the weekly. So what kind of situation we have and how we will be approaching it with students. Now, before I show you how we will be approaching this kind of situation with students, let's go and give a quick check at what we have on gold from a COT perspective. So what the biggest banks and institutions are currently doing on gold. Now, what we can see is that with the last report, longs reached 321K and shorts 83K from the 24K that we had here. So institutions during this big move to the upside are adding more shorts on gold. And net positions are clearly, yes, increasing because the longs increased even more. And clearly we see this reflected in the market. But at the same time, lately, we can see that this increasing of the net positions is not happening anymore, and net positions we can expect to decrease with the next report since institutions started adding more shorts. Now, what do we know? We know that from here we can expect a reaction. Now, if you are already in a short from here, great job. You can continue to run the trade risk-free. But if you are to be looking for a potential short, I really don't suggest that you be looking for any shorts from here, because from here, the market can and should be rejected to the upside. So if you want to be looking for a potential opportunity on gold, first of all, it's very important inside of here to be looking for buys, not sells. So with students, what we will be doing, first of all, inside of this area, we will be monitoring price action on the 4-hour time frame to see if the market will actually break or if it's ready to bounce. So we will be monitoring price action on the 4 hours inside of this area because, as usual, trading is reactive, not predictive. And if on the 4-hour time frame we will see proper bullish price action, then we will be looking for a nice long with a good risk to reward and good probabilities for the move to the upside. And at that point, once the market will reject this area, we will again go risk-free on the position, because if we will start to see the market failing to continue higher, we will be looking for a potential sell for the market to reach the weekly target and the creation of this M formation. This is overall what we have on gold, what we would like to see the market do on gold. But as usual, trading is not predictive. Trading is reactive. So we need to see proper confirmations both here and here on the 4-hour time frame before we can be looking for any potential trading opportunities. And that is exactly what we will be monitoring with students. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.